Time for Hot Picks, and today we are zeroing in on the industrials. Our next guest sees opportunity for, thanks to its exposure to nuclear and growing demand for data centers. For more on his top picks, let's bring in Maxim Sytchev, Managing Director of Industrial Products at National Bank Financial. Maxim, always a pleasure to have you here. Thank you for joining us.
Likewise, Russia. Good to be back.
Okay, let's start off with AtkinsRéalis.
Yeah, it's an interesting story right now because a lot of engineering consulting names have been derated, and the fact that Atkins is actually flat year to date is a bit of a positive sign in terms of how the market is perceiving this name right now. But the reason why we're so excited about this name right now, especially at current valuation of only 18 times PE, is the fact that 20% of companies' top line comes from nuclear space. And when you listen to what the federal government is right now proposing to basically build 10 nuclear reactors in Canada over the next, let's call it 10, 15 years, and two actually in the ground by 2035, that means that the TAM for Atkins is quite massive. Based on our calculations, around 100 to 150 billion of extra revenue could be generated from these projects. And that means for Atkins, roughly 22.5% of that TAM would be their addressable opportunity. So when we're talking about on a persistent basis, as much as 40 to 50% of companies' top line could be coming from nuclear over the next decade. Why this is important is because that's the business that trades at a materially higher multiple versus engineering consulting. In fact, Holtec, a company which is going public in the US right now, is IPOing at 40 times EV to EBITDA. So if you were to use the same multiple on Atkins, the NAV on this name would be north of 130 versus our NAV of 108. So material upside, assuming that does take place at some point in the future. And again, we have high confidence that nuclear is for real in Canada.
Any concerns with the engineering services region's organic growth? It's apparently underperformed, just looking at some of these numbers.
Yeah, I mean, in terms of the momentum, we still believe that 6% organic growth rate is achievable for the company. It's really partly driven by the fact that Canada needs to accelerate, which it has started to do so. U.S. exposure is not massive, and I would say that's the market which has a bit of a question mark right now in terms of some of the public funding dynamic. But we do believe that, especially in the UK, where the company has very, very strong presence through their legacy, obviously Atkins transaction, that the market opportunity there is actually quite robust. So yes, engineering, there are some question marks, but we do think that the positives outweigh the negatives.
Okay, next up, Finning International.
Yeah, very interesting story here, I think, at this juncture. So Finning is the largest Caterpillar distributor in terms of revenue globally. And what's interesting right now with this name is that most of the geographies to which it's exposed is actually inflecting. So you look at LATAM, which is really driven by copper, and copper is being right now supported by data centers, electrification of pretty much everything. So that's a very good spot to be in, and copper is north of $6 USD a pound. So lots of opportunity there. We think that the fleet that Finning is running there could potentially double in the next 5 to 7 years. Argentina's recovering, et cetera. So super bullish there. What's interesting with Canada, which is 50% of top line, is the fact that we're trying to build things in Canada. Obviously, we talked about nuclear, but pipelines, LNG, and data centers is an emerging opportunity. The interesting thing is that right now we have seen announcements in terms of data centers, envelopes, who's going to be building them, et cetera, connections. But so far, no announcements when it comes to backup and primary power for these data centers. And that's where we think Finning could play in. We looked at the space, assuming that 13 gigawatt data center capacity could be going forward, and that could represent $2 billion of extra revenue for Finning. Right now, I mean, some numbers are floating around that 20 gigawatts of capacity could be added in Canada over the forecast time horizon. So multiples of that 2 billion that we mentioned. So again, it feels like the end markets are materially more robust, but more importantly, the execution as well from the management team has been dramatically better over the last 4 to 5 years, and that's what's being reflected in materially improved ROE over the last 5 years, which we do expect to continue. So,
All right.
and it's still not expensive versus the likes of Caterpillar.
Want to get in one last one. We've got about a minute. So Badger Infrastructure.
Yeah, we became very bullish on this name when the stock was mired with some margin concerns, and since then shares have risen by 44%. The reason why we like this name, it's mostly U.S. driven, so 90% of top line coming from the U.S., 10% coming from data centers, so the capacity there is extremely tight, and revenue per truck has actually increased by 11% in Q1. So we do believe that there is materially more upside in this name, as the company is actually adding roughly 200 net units to its fleet, and we think that by the end of the year they're going to be at roughly 1,900. So again, revenue opportunity is there, free cash flow will inflect, and it's a very, very tight market right now for hydrovac services in Canada and the U.S.
All right, we'll wrap it up there, Maxim, but always a pleasure to talk to you, sir.
Likewise. Thank you.
Maxim Sytchev, Managing Director of Industrial Products at National Bank Financial.